Hello everyone and welcome back. In this video I want to talk about software stocks and why specific software stocks will collapse because of AI and why some specific stocks will rise and thrive because of AI. Now at the moment all these software stocks are down. Some are down more than others. When Anthropic Cloud announces a new plan, a new project, specific industries go down, and we will study this. I have a table to show you here, and also I will show you some specific charts so you can really understand where to invest. What are the industries that will not be disrupted because of AI? Okay, where are the safe havens in this industry of software? So now, as you can see from this chart, the software basket is low, is hated at the moment. So it feels like catching a falling knife and it can be very scary. And I hope this video helps a lot of people to buy the dip, because for some companies, it's a buy the dip opportunity. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And I am buying the dip on software. I bought specific companies, and I first want to share this chart with you from 3x Long Labubu, because he released this chart when Claude Anthropic announced a new cybersecurity project. So cybersecurity stocks went down. And also he is sharing this table about the moment Anthropic announced something about a specific segment and all the tickers of the companies that went down. This is lovely. This is the only table I've seen explaining the impact of Anthropic, how scary it is to invest in software. So as you can see here, September 2025, you had a new segment that was being disrupted by AI, front office app software. So you have a DocuSign here, for example, and on the day, all these stocks dropped roughly 10-11%. The reason is you have a new announcement of a new product, okay? Something in January, gaming levered. So obviously Roblox, Tech2 Interactive, all the companies about gaming suffered Unity because Google announced Project Genie 3. So in one day, all these stocks went down because on Genie 3, you can now create 3D worlds. And people said, that's it. You no longer need studios to create 3D worlds because you can do it for 1 minute on Google, on Gemini. Okay, good luck creating the next game. It's like vibe coding your own video game, and you had a huge sell-off here. Also, on February here, you had Legal Tech. Same thing, Thomson Reuters. Cloud's legal plugin impacted all this industry. Everything went down 16%. After this, February, wealth managers, all of them, Schwab, minus 8%. Adris launches AI tax planning feature. Or again and again and again, freight logistic. Every time there is an announcement from AI, major stocks, all the stocks go down in one day. But out of this list of all these stocks, not everyone is getting disrupted. Only a small amount of them will die because of AI. The rest will be stable and the others will thrive. And it depends on your circle of competence, depends on you, whether you can spot the winners and the losers. For example, what is your circle of competence? Okay? This is a very good question because I don't want my audience to rush into buying all the dips in the software industry when the stock is going down, because it's the wrong way to do it. The right way to do it is a stock is getting crushed right now. There is a lot of fear. Do I know how to decipher between a winner and a loser? By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. For example, I can tell you my circle of competence is gaming. I've been playing video games for roughly 20 years now. I know you can't vibe code a game. Some people will create games. I'm currently creating a game for a friend for his birthday, okay? I will vibe code a small game of 2 minutes. That's it. This is what I can do with Project Genie right now. For individuals, that's fine. But for professional games, impossible. Now that you have this for the gaming disruption, people are worried about the future. What if you can create 3D worlds much more faster, for example? What if instead of hiring 10,000 engineers, designers, you only need 100 designers? Because you can create many worlds, 3D worlds at the same time. Actually, this can be a tailwind for all these industries, all these companies. Because if you are a gaming company and you can create 10 times more content, you can get 10 times more productive, 10 times more efficient. So maybe you can cut some stuff that was useless. Or maybe you can create 10 times more games. So why wouldn't it be a tailwind for gaming industries to have new AI generative tools? But still, these stocks went down. These stocks are hated because of the uncertainty risk. And people don't know. So actually, in this software sell-off, not everything has to be bought, but depending on your expertise, your circle of competence, you can spot where it doesn't make any sense. I was watching a podcast from The Compound for this line, wealth managers. And The Compound is a great podcast that I listen to every week actually. And they are wealth managers. And the moment you had a tax planning feature, a plugin, Schwab went down and they said, I can't believe people sell on this news. It's so stupid. As if AI would disrupt Schwab. And if you are an expert in your industry, you can have an opinion whether this is stupid or not, the sell-off is stupid or not. Well, I told you the example of gaming. I think the sell-off is stupid. Some wealth managers say this sell-off is stupid. What if the entire sell-off for the entire software industry is stupid? What if for all these lines you see here, all these segments, people freak out too much? What if you have too much fear? What if this sell-off in the software industry, for specific names, is a golden opportunity to buy? In the past, these stocks were expensive. Now they're back to fair value and some of them are cheap. What if in hindsight, 5 years from now on, they say, oh, I should have bought the dip in early 2026. It was a beautiful buy dip opportunity. So much fear, it was narrative driven. And now, as they announced this table, they created this table, Claude just announced a new cybersecurity vibe coding screening service, as if people would trust LLMs for cybersecurity. The same week of this announcement for cybersecurity, we learned that Claude was hacked. We learned that people used LLMs to take some big data from Mexican government. Cybersecurity is here to stay. Cybersecurity is very hard to dislodge. Cybersecurity is very hard to replace. And either you can trust ChatGPT to do your own cybersecurity, or you just don't want to do anything with ChatGPT because there is an hallucination rate. What if you rely on Claude for your cybersecurity? And what if they fail? Who will you attack? You cannot complain. You cannot sue them. If I can talk about this later. But if there is a cybersecurity problem, you can sue the cybersecurity company. People are doing this. If there is a problem like CrowdStrike, you can attack them. If Claude has a problem and fails at your cybersecurity, you cannot sue them. It's your fault. Like, it's a responsibility feature that you also have for wealth manager companies, for example. You also have this for data providers like Moody's, S&P Global, MSCI. If your Moody's rating is false, you can attack Moody's and say that's their fault, the rating was bad, so pay me because your work was bad. And you may win. If you use Claude and Anthropic for an AI credit rating stuff, you cannot sue Anthropic. It's your usage of the LLM, so that's your fault. You cannot sue anyone. That's your responsibility. So actually, you had a sell-off for plenty of companies, but for plenty of companies, the sell-off is extremely stupid. So I'm thinking that plenty of these stocks will rebound. Moody's, S&P Global, MSCI, this kind of stuff is not being impacted by AI, right? It's about trust, reliability, responsibility. So I think some of these stock declines are a little bit stupid. Now let me show you some charts from TSCS. The SaaS sell-off just erased $1 trillion in market cap. We are down 20%. It was a post from March 2nd. And Jeffrey said it's the worst get me out selling since 2008. I think the market is dead wrong on half these names. So you can see here the software ETF in red going down. The market is selling 80% gross margin businesses to buy 40% gross margin businesses. The entire SaaS panic in one sentence. And then you have this beautiful chart. Okay, so thank you for sharing TSCS. Cloud Cowork just dropped enterprise connectors for Google Drive, Gmail, DocuSign. Software stocks tanked again. Thomson Reuters fell 16% in a single day. But here's what nobody's asking. What happens when the model layer itself becomes a commodity? So here is what Cloud Cowork can do. Productivity, finance, data analysis, legal, product management, marketing, and these additional layers of analysis will get more complex over time. This was the sell-off we saw in the past. Okay, so Cloud can automate many things. He mentions the example of Viva Systems and the moat, OpenAI and the dollar of revenue, the API pricing, and then you have this. I built a framework, 2 axes, workflow complexity and data moat depth. It creates 4 quadrants. There is a dead zone, there is a fortress zone. Okay, the sell-off is backwards. AI makes them more valuable. So, in this article, he mentions the dead zone. Things that are not complex, you have low complexity, shallow data, no proprietary data, no moat. Key characteristics are structured, repetitive tasks. These stocks will get killed because of automation from AI. Minimal regulatory overlay. The reverse of what I just said for Moody's. Responsibility, trust, reliability, regulation. Moody's is the reverse of this line. Minimal regulatory overlay. Okay, this is a dead zone. Data easily replicated or scrapped. AI can replicate core value proposition. And he mentions three stocks, 3 companies, Five9, Freshworks, and Zendesk. Verdict, carnage is justified. Okay, so for all the companies that are that have these characteristics, AI will disrupt you, and I agree with that. You can put your portfolio right now on Gemini, on ChatGPT, and you ask, can you rate my portfolio based on these 4 characteristics? I mean, you're watching a video on YouTube. Go out of YouTube, go open Gemini, and put this. Put the simple prompt. You put a screenshot of your portfolio and you say, please Gemini, tell me if my portfolio is in the dead zone. Here are the characteristics. Boom, 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 boom. And you will have an opinion whether your portfolio is screwed or not. If your companies are disrupted or not. And you can do the same exercise for the next slide. And they call it the fortress zone. High complexity, deep data. Key characteristics. 1, regulated verticals, healthcare, insurance, finance. 2, legally mandated compounding data moats. So Moody's is in this example. 3, natural AI orchestrators, not victims. 4, years-long demo to deployment gap. So they mentioned a couple of companies. Viva Systems, with decades of switching costs. Guidewire, halved from highs. All the insurance companies got crushed. ServiceNow, obviously very famous on YouTube. CrowdStrike, cybersecurity company. Snowflake and Procore. Okay, the verdict is selloff is backwards. AI makes them more valuable. So again, you can make this second exercise. Put a screenshot of your portfolio on ChatGPT, on Gemini, or Claude. I mean, you do whatever you want, and you ask, is my portfolio in the fortress zone? What companies that I own are safe from AI or in a dead zone, impacted by AI? Okay. Then they mention Adobe, that is very cheap at 14 forward earnings, cheaper than Coca-Cola, very nice margins, free cash flow. The market thinks it's just Photoshop getting disrupted by Midjourney. It's ignoring Document Cloud and Experience Cloud entirely. This is 2013 all over again. This is not the first rodeo that Adobe has. Back in the days, they were also getting hated and doubted, and they thrived. So this is the round 2. Adobe moat, you have a big moat, wide moat because of the workflow, automation, copyright, etc., and they generate massive free cash flow. But you have key risks because of new monetization system, new competitors that are moving fast, and AI implementation, okay? And pricing power that will maybe no longer there. And they mentioned the catalyst. The catalyst that could announce the bottom for Adobe. It would be the quarter where Document Cloud and Experience Cloud growth re-accelerates visibly enough to break the Adobe equals Photoshop framing. So they give a guideline of 1 year, 1 year and a half. Okay, then you give the AI parallel, very interesting. And they conclude this thread by the Jevons Paradox. Obviously, cheaper AI means more demand flowing through systems of record, not less. Every AI agent needs data to act on. That data lives in the fortress. They also mention proprietary data and Thomson Reuters. It was announced a few days ago that Claude used Thomson Reuters. Actually, it was here from 3x long Labubu. You see here, Thomson Reuters here, Legal Tech. It was announced a few days ago that Claude, Anthropic, was using their data to operate. So the stock went down because of fears of Claude, and then the stock went up because of Claude implementation. They have a partnership. So it makes no sense. And I agree with you. So the sell-off is purely narrative driven. There is no rationale. It's just people freaking out for specific companies, right? I'm not telling everything. You have seen before the companies that are getting disrupted. You want to avoid the dead zone as much as possible. And for the fortress, you want to invest in these companies. I'm very bullish on cybersecurity in the future. People are reckless when it comes to AI agent at the moment, and you will need much more cybersecurity in the future. You can't vibe code a cybersecurity company. CrowdStrike is here to stay. They are in a very good shape in this AI world. So yeah, I'm a big believer in cybersecurity as a whole. I'm not an investor in CrowdStrike. The valuation is too high. I'm an investor in Fortinet. But yeah, I think this sell-off for some specific software companies in the fortress zone is just too much. And you have great opportunities at the moment to buy great companies, excellent companies at a cheap price. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn my strategy to generate 25% annual returns. You will learn how to find winning opportunities. You will learn how to properly value any stock, when to buy, when to sell, so that you can build a strong portfolio filled with great companies. Additionally, inside this coaching program, you will have access to an exclusive community of like-minded investors, and also you will have my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need for your email address, just click the link in the description and I'll see you on the other side.